So yes, I do want to chat this morning. We're chatting with Patti Gregory, Heaven Realty Group. Good morning, Patti.
Good morning.
So I'm gonna, I don't usually do this, Patti. So we're gonna go rogue on Ron Siegel Radio. I'm gonna let you set this up because this is how we got to talking about this and doing this on radio. So I'm gonna let you set this up, and then we'll run from there.
All right, I love it. So I'm on like 5 masterminds a week because this market is just pivoting all the time. So, staying on top of everything. And I love your daily email about the market. Love that. It's 3 sentences. I did a video about it yesterday. So somebody was on a mastermind saying that they ran into someone working NODs. And she's like, they're on reverse mortgages.
What's an NOD?
Sorry, notice of default.
Notice of default, okay.
So notice of defaults on reverse mortgages. And like you helped me get my mom and stepdad into a reverse mortgage, and they love it. I'm like, enjoy your money, live for free. So that didn't make any sense to me because reverse mortgages, they tend to have a ton of equity. So why would there be a notice of default? So you were my first call.
Okay, so the easy answer is that every reverse mortgage is a loan, nothing more than a loan, on a property for a senior, and it's a primary residence loan. So there's no payments on it, even though the interest accumulates for the loan over time. So the balance, or if there's no payments required, they're optional. So when those payments, when a person passes, then automatically the loan becomes due and payable. And for some reason, I don't know this, Patti, for some reason, the reverse mortgage lenders and servicers find out when someone's passed away quicker than anybody.
That creeps me out.
It is. Isn't that weird? I mean, when my mom passed away, this was in 2018. I think I know I got a condolence note from the reverse mortgage company before I had copies of the certified death certificates.
That's crazy. So
it's quick, but the loan is technically due and payable. So being that the senior's no longer living there, obviously they've got a new resting place. It's in default. Doesn't mean that the servicer's coming after the estate.
Right. But for the heirs, now they're looking at this letter from the bank, and it's got to be so unsettling because they're grieving. And so then I'm thinking, I've got to let people know about this so they're prepared and they know what to do and how to get through the process.
So when when the first letter comes out, the condolence letter, it's just a letter from the servicer. And in the case of my mom, it was just a letter from the servicer extending condolences. They didn't even mention the loan other than the fact that it came from XYZ mortgage company. They didn't even mention it. I knew who it was from, but they didn't really mention the fact that they want their money. They really don't.
They waited till the second letter.
Yeah. So about a month later, we got a second letter, and it was nothing more than stating, your mom had a reverse mortgage, and a reverse mortgage is an owner-occupied loan. It's for the life of the senior, the last senior that's on the loan. And how do you want to handle the lien? It was not threatening at all. It was not aggressive at all. It was, how do you want to handle this? Give us a call and we'll explain your options. And the options are, we had the choice, and they know, because if the property goes through probate, it's going to take an extended period of time. Hopefully, everybody that listens to Ron Siegel Radio, everybody that follows Patti Gregory
in a trust,
has their properties in a trust, right? Don't go through probate. And unfortunately, I'm dealing with 2 of them right now because people don't listen. They're not going to die. I'm here to tell you right now, I like to be straight with people. You will die. Hopefully no time soon.
Right.
But you will. Right?
I had one go through probate a year ago, January, and it took months.
Right. So the lien, the servicers know this. So what are your options? The family can sell the property, the estate. I don't know, it's not always the family, but the estate. Oh, Josh. Okay, so if you want to know your options, you're going to have to listen to the next segment. Josh just told me we have to go to break. Continuing our conversation, Patti Gregory, Heaven Realty Group, is with us. Just chatting, a couple of kids, I'm the old one, thinking about our parents having reverse mortgages. And I'm just going to throw it out there, Patti. Does your mom, do you like the reverse mortgage?
I love it. And
okay.
I think the only person that's not going to like it is a kid that is being greedy.
That's funny because I say the same thing. And even that, it's because they don't understand that if the parent had a mortgage payment, that would be diminishing other assets. So now if they've got an interest, the other assets are still growing.
Right. And they used to have a horrible reputation back in the day.
They did. And something pre-1985 and a President Reagan, I don't know whether it was an executive order or law. It was a horrible product.
Yes. And they were notoriously slow when you were trying to sell. I sold one maybe 10 years ago, family home of a friend of mine, and it took forever to get the bank on board with the closing because they were making so many fees every month. Yeah.
And now, so before the break, I was explaining the options that an estate has, and the property goes right into the trust. Hopefully you have one. If not, it goes to probate. But whatever the estate wants to do, the estate or the trust says, that's what's going to be done with the property, or who's going to have control. The estate has control of the property, not the bank. The bank never has control of the property. So there are three options that the estate has. Number one, sell the property. When you sell the property, it's just like any other sale. Sell the property for $1 million, hypothetically. The lien on the property is $500,000. $500,000 goes, less expenses, goes into the estate. However the estate is set up for distribution, that's what happens. Trustee does whatever, or the successor trustee does what they need to do. Now, what if somebody in the family or the beneficiaries wants to buy the property or take over the property? It's not buy the property, it's take over the property. Well, they can go and refinance the lien off and put a new lien on, or pay cash or whatever they want to, and they take over the property. It is not the bank's choice. It is not anybody's choice, but the successor trustee makes the call. So if they agree to a price or whatever they're going to do, then they can refi. Now, the beauty of it, because the ones we're talking about are FHA refi, or FHA reverse mortgages, or FHA home equity conversion mortgages. If the lien is greater than the value of the property, the mortgage insurance kicks in and the estate buys or takes over that property at 95% of the market value. So that the estate gets a benefit. Now, if the property's upside down again, and it just doesn't happen very often.
Yeah, it's pretty unlikely.
Right, very rare.
Yeah.
So if in the event that the lien is greater than the value of the property, well, then the estate can walk away completely and just say, servicer, I have mortgage insurance, you get the property, we're out. Three options, real plain and simple. Now, how long do you have to do all this?
That's the great question, because there's so much going on when someone passes and the family's dealing with so much already.
Right. So you have 6 months. That's really, so the question becomes, is it a hard 6 months? No. Because if the servicer realizes that you're working towards resolution and communicating, they'll give you an automatic extension for another 6 months.
Good to know.
And it wouldn't surprise me if they continue that. If it's a probate case, they may, now it's going to continue.
So they allow for the time to go through probate. Okay, right, because that's what they need to know.
Yeah, because they're not going to force somebody to. I mean, technically, who can sign off on transferring title if a property's in probate?
Right.
Right. It's got to be the court. So, you know, who's going to, and if there was a foreclosure or whatever, the court has control. So it's not going to happen. So the bottom line is it's a great product. And Patty, I think you and I talked about this when we were talking about your mom. My feeling with my mom was, in the golden years, it's all about cash flow, right?
Absolutely. They've worked their whole lives. They need to enjoy this.
Right. And if you're lucky enough, you spend your last, I wanted my mom to spend her last dime on her last breath. She didn't stay that long, but Linda Eisenman, great real estate professional here in North Orange County. I did one recently, Ron, and we got a 6-month extension. We were told we can get another extension if needed. Fortunately, we had a successful closing for all parties. Yeah, perfect. Exactly. So it's a great product, and I just love the product. I'm a big proponent of it, because in the golden years, you're not in your wealth accumulation phase anymore.
It's time to enjoy your money.
Exactly. Have a great time with it and really enjoy it. So that's the bottom line. And if you have questions, put questions in the comment box. Josh tells me we've got to go to break, so we're going to do that. Linda says, it was one of my Brea clients who moved to the purchase a retirement home. Yeah. She passed away before she even got to occupy it, sadly. Ooh. In her case, the family was able to sell it and move forward. You know, that's the and basically when they say that they got a 6-month extension, you know, it wasn't that the servicers were a bunch of hard noses, right? They understand that it's a tough time. And think about it. I mean, if a property, you start out with that 40 to 50% loan to value. So you've got about 50 to 60% equity. In Orange County, we appreciated about 5.3%. So we have 5.3% appreciation on $1 million, and the loan is say $500,000. The interest rate is not going to ever catch up. So
right
now, I don't know about Linda's case here, because if it was a new purchase, that's the only time when I say the reverse mortgage is not worth considering for a senior, is if it's a short-term hold. Now, this one wasn't a intended short-term hold, but other than that, great product.
Absolutely.
So we're going to talk when we come back about transition loans, or bridge loans, some people call them. We're going to chat with Patty. Go ahead.
Hot topic.
Yeah, it is. Continue our conversation. Patty Gregory, Heaven Realty Group, is with us. And, you know, this is unusual. It's Ron Siegel Radio, and I'm answering the questions. So talk to me about this one, Patty. I know this is from another one of your masterminds that you're hearing about this. So let's talk about this one.
People buy homes without a contingency to sell their home, because we do it every day, but it can be very daunting for somebody and stressful for them to think, oh my gosh, I've got to get this in escrow, and I've got to get a buyer that's going to stay the term until I find my new house. So there's a lot of moving pieces. And the max I did was 4 people. That was actually for my mom. She was number 4. And there's a lot of moving pieces. So having a bridge loan in place takes all the stress off.
Yeah. So a bridge loan or a transition loan, or for those that have been around a long time, we also call them a cross-collateralization loan. Cross-collateralization loan. And we're in the middle of one of these right now, and it's a tremendous product. So here's how it worked on the one that we're in the middle of. I'm not going to give any names to protect the innocent. So got a property in Southern California valued at about $1.3 million. And I'm just going to call it $300,000 on it, just for round numbers. And they want to buy a property in Idaho, out of state property. And that property is about $800,000. So that property is going to sell quickly in that area. And even though we know the property in Southern California is going to sell quickly, this client says, you know something, I want to make an offer on this one and get it done quick, get it locked up. I don't want to wait for my property to sell. Transition loan, bridge loan, cross-collateralization loan, all done by all the same name. Same thing I've shared many, many times. Strategy beats rate always. Strategy beats rate always. So how do we solve the problem? We did we paid off, we looked at all these numbers and we say, okay, we've got $1.3 million on the departing property. We've got $800,000 as value of the acquisition property. That's $2.1 million value in the real estate. We looked at that and we said 70% of that is what we could loan, 70% of $2.1 million. Now, I don't have a calculator open, so I'm just going to say that it's somewhere around 600,000. $1.4 million is what we could do a new loan for. $1.4 million. What do we do? So we paid off the $300,000 on the departing property. Now we've got $1.1 million available. So we paid cash, in essence, for the new property, $800,000. So the new property has no loan on it. There is a lien because the lien goes on both properties. But now, because of being able to look at all these values, our portfolio division did not even do an appraisal.
Interesting.
So we were able to close this. We were ready to close 3 days before the agents and the parties were ready to close.
And it takes the clients what would have been maybe the worst offer on the new property to the best offer on the new property.
Yep, absolutely. Yeah, so so there's again, when we talk about strategy, part of the strategy has to be getting the family the property they want. Right? So Patty, You're talking about this one. If we've gone in there and we've done the due diligence on the background, what does the due diligence mean? Well, we've looked at how are we going to get our money back? Right? Because typically these are 6-month loans. Right. So we want to know that the property, now, could it be extended? Yes. So it can be. There's going to be some hoops that have to be jumped through to get that. And in the instance of the one that we're talking about now, not only is it going to work out splendid for this family, they're not making any payments for the first 3 months.
Right.
On none of the properties. So they're saving the payment that they had, which is about $4,000 a month on that property, because even though it was a small loan amount, it didn't start out small. So their payment was $4,000 a month. The only thing that they've got a responsibility for is making sure they can keep up with their taxes and their insurance. So
I love this.
Yeah,
it solves a lot of problems.
Yeah, and that's the whole thing. That's our whole focus. Now, when we go and do the takeout, well, we're going to take out the new loan. We're going to restructure that one once we sell the departing property. And now we're going to put a boatload of cash in this person's pocket. We're going to do it with our friend Todd Halterman. And we're looking at it because we don't want to have to pay capital gains taxes. So part of that, again, strategy is saying, how do we do this? Minimizing capital gains. It's not a 1031 exchange, but it is a 100-year-old law that's on the books, or guidelines within the IRS code, that's been used for farmers for nearly a century now. So it's been tried, tested, true. So we're looking at all these different pieces of the puzzle. So save the taxes, get the property you want. Anything else we need to worry about there, Patty?
I think it's got everything covered.
Right? I mean, that's how much more could you want? And you got the property you wanted. And if this person needed to go higher, they know that they've got the liquidity to go above asking price if they needed to.
Right.
Right. And so one of the things that we put out yesterday was, even if you go above asking price, how long is it going to take for me to get to be in a positive situation? So we did this yesterday when we came out with that product that I was mentioning earlier on a 6.546 APR, 30 years fixed. And we actually did that based on going above asking price. And when we looked at that product, or we could do it with anyone, and said, okay, based on history of the area and the historical appreciation and forecasted appreciation, what's our break even? 7 months.
Nice.
7 months. So you're willing to get the property you want by paying above the asking price today and have a 7-month payoff?
That's
solving
a win.
problems.
Yes.
So if you want to know more about these situations, give me a call, 800-306-1990. No, I will not help you with the real estate, but I'll put you in touch with Patti Gregory because she can. Give me a call again, 800-306-1990, 800-306-1990. Strategy beats rate always.